Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds that reach financial freedom as soon as possible. And today I'm going to talk about two very popular and big covered call ETFs on the US market, pretty much the biggest one, JEPI and JEPQ. So JEPI and JEPQ. Of course, I'm talking about the JP Morgan Equity Premium Income ETF, that's JEPI, and then their more newer brother or sister fund, the JP Morgan Nasdaq Equity Premium Income ETF. So JEPI has over $20 billion in assets, so it's by far the biggest and most popular covered call ETF on the US stock market. JEPQ just crossed 2 billion, so very popular. So yes, these are listed on the US stock market, but it's very relevant for us Canadian investors who hold HYLD, because these two ETFs make up 30% of HYLD, the Hamilton US covered call enhanced ETF. So very important information. We need to understand how these ETFs work, what's inside of them. So that's what we're going to do in this video. I'm going to try to explain or do a deep dive into these two very popular covered call ETFs, and I do have a special, very exciting announcement at the end of the video. Let's get started. All right, everyone. So as usual, we got to go find the information on the fund's official website. So here it is. I am on JP Morgan Asset Management website, and we're looking at JEPI first, JP Morgan Equity Premium Income ETF. So the first thing I always want to look at is, what is the mission? What is the first statement or the objective of the ETF? And you see it right here, consistent premium income. So already you have my attention with income with lower volatility. So a typical sentence we see on any covered call ETF. So this ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. So defensive equity portfolio. We're going to check out what's actually inside this ETF, what's actually inside the portfolio in a second. Bottom up fundamental process research. When I see this, it typically means they're stock picking, right? Stock selection based on risk-adjusted stock ranking. So this seems to me right off the bat a more actively managed ETF, not a systematic or an index-based ETF. Discipline options overlay implements out of the money S&P 500 index call options to generate monthly income. So this is a very important line. First of all, we know that the calls are out of the money, so they're not aggressive at the money calls, which means you're always participating in upside when the markets go up, some upside. S&P 500 index call. So right away we know that this fund more or less is trying to track or has stocks in the S&P 500, and they're S&P 500 index call options, which means they're not writing the calls on the individual stocks. They're writing it on the option itself, in this case the S&P 500. So very nice high yield. We're going to check all that in a second. And really low management fee, MER. This is not the management fee, everyone. This is the MER, so includes all expenses at 0.35. So very low management fee. Not really surprising considering it's JP Morgan. The bigger the institution is, the more they could give a low management fee. So I just want to point out real quick here that this fund is it's humongous. It's over 22 billion, almost 23 billion dollars in assets. So it is by far the biggest fund, the biggest covered call ETF in terms of assets on the US market, on the Canadian market, everywhere. It's just the biggest and most popular one. So the first thing I always want to look at is when I'm investing in any fund, whether it's an ETF or a mutual fund, a closed-end fund, a split fund, what's inside the portfolio? What are the stocks? So you click on portfolio and we see that here. Right off the bat, I notice here 136 holdings. So S&P 500's 500 stocks. This is 136. So obviously they're stock picking and you're not getting all 500 stocks in the S&P 500. And you see the top 10 here: Progressive, AbbVie, Hershey, PepsiCo, Coca-Cola, MasterCard, Microsoft, Visa. So right off the bat, what I personally notice is, Apple, Microsoft, Amazon, Google are not at the top. So this seems to me right off the bat a little bit more of a defensive portfolio, just like they said. And they're really stock picking in here. If we click on a sector exposure, you will see the sector allocation. Another thing I noticed is how low the information technology percentage is compared to the S&P 500 index. It's much higher. It's the top sector in the S&P 500 index, but here you have a lot more defense. You have, as you noticed here, a lot more financials, healthcare, consumer staples, very defensive, industrials, not that much in tech. And you also have about 15% in other, which we'll investigate further. So if you just click on the fact sheet, which is really up to date here, February, it's not even a month behind, or it's a month behind. I'm filming this video, by the way, on the 30th of March. And you see here basically the information, it was launched in May 2020. So this fund is not really that old, and it's so big. That just shows it's very, very popular. And if you scroll down again, you'll see the sectors very low here in technology. So, this is really going to be more of a defensive style covered call ETF, in my opinion. So very, very interesting. If you click on top 10 holdings and you download, you could actually see all the holdings which are here. I already opened it up. But before we get into that, I want to go into what us income investors, of course, are always interested in, the dividends, the monthly dividends. So here it is. Here's the entire, as of April of 2022. So you could see the monthly distributions do vary. Okay, they're not set in stone, obviously, which makes sense. This is an actively managed fund, and you could see that the average, I would say, is about 45 cents to 50 cents a month. It's very hard. You'll never be able to predict the monthly distributions, but let's say on average, and I'm taking a lower number here because maybe the average is about 50 cents a month, but let's just take 45. If we take 45 cents a month, so we just do 45 times 12, because of course we want to do it annually, the annual yield. So $5.40 a year. If we divide that by the approximate stock price now, which is about $54, you will have the yield of about 10%. So a nice 10% yield, guys. Very, very nice high yield. This fund does not use any leverage at all, by the way. And very interesting because these are not at the money calls, or out of the money. So in terms of performance, phenomenal performance. I have to say I was very, very impressed. If you compare the, obviously they're going to compare it to the S&P 500. S&P 500 in the last year, this is as of the end of February, about minus 8%, but this fund actually has a return, or a positive return, of just under 1%. What does this mean? It means in the last year it's beating the S&P 500, as simple as that, which makes sense because it is a covered call ETF, which shine or typically outperform the index that it's trying to track during bad times. So very, very interesting ETF here, everyone. Nice monthly distributions, although they vary. If we do an investigation further in the holdings, what you might have noticed if you start scrolling down is that eventually, remember there was that 15% in other. What is other? Well, if you scroll down, you'll start seeing these things right here, SPX 29, and you see, what is that? Equity linked notes. So there's quite a few of these. If you scroll down, you'll see more of them. Here's a bunch of them here. Equity linked notes. So what are equity linked notes? It's a very interesting question, which I'm sure you have, and I had it, so I looked it up. And equity linked notes is just basically a debt instrument. So it's like a fixed income debt instrument that's designed to track equity, which are stocks. That's why it's called an equity linked note. So I can't tell you exactly or explain exactly what it is, but I have the explanation. Just stay tuned for that special announcement at the end of the video, and I'll talk more about that, and will definitely satisfy your answer if you're wondering what those are, like I was. So before we get into the announcement, I just want to quickly go over the other ETF, JEPQ. This is much newer. It came out not even a year old. And it's basically the same style of the same strategy, but instead on the S&P 500, it's on the NASDAQ. That's why it's called the NASDAQ Equity Premium ETF. So the yield has been a lot higher. You got pretty much the same style where the options are out of the money. They are on the index itself. In this case, the NASDAQ 100 index. If we look at the fund assets, you see here it just crossed $2 billion, which is absolutely incredible for a fund that's not even a year old. And again, the distributions, which was what we're interested in, they are varying monthly distributions. Very hard to tell what you're going to get, but on average, you're expected probably to get about 45 cents again. The last dividend was 43 cents and 44 cents and 57 cents here. So if we just say, let's just take the bottom, about 45 cents. And again, we times that by 12, 540, and we divide it by the current stock price. your yield is about 12%. So very interesting, high yield. It's not surprising that JEPQ's yield is going to be higher than JEPI because if they're writing call options, the NASDAQ is a lot more volatile, which means higher premiums, so higher monthly distributions. The MER is the same. If we look at the portfolio, it's kind of, again, it's not 100 stocks. Like the NASDAQ 100, it's 84. And again, there's going to be some of those equity linked notes. You actually have them here in the top 10 holdings. Again, I'll explain equity linked notes at the end of the video or give you an update on those. But these are going to be more NASDAQ stocks, right? Microsoft, Apple, Google, Amazon, Nvidia, Tesla, Meta, which makes sense. If you look at the sector exposure, of course, this one is going to be much higher than JEPI when it comes to information technology exposure. But it's not just a pure tech ETF. It's 40%. You do have communication services, consumer staples, a tiny bit in real estate and utilities. And of course, the other here, this represents those equity linked notes. You have healthcare in here as well, a little tiny bit in financial. So very interesting and popular covered call ETFs managed by JP Morgan, JEPI and JEPQ. So great for us income-oriented investors. If you're American, these are very, very popular, very highly recommended. And for us Canadians, remember, these two make up 30% of HYLD. So what is my special announcement now that I wanted to discuss? Well, I will speak to, I've already done it actually. I have done an interview, about a 40-minute interview with Hamilton Rayner. This guy is a legend at JP Morgan. He's actually the head of derivatives, guys, at JP Morgan, and he agreed to speak with me and talk about JEPI and JEPQ in details. So I have my little book here, which are the topics that we discuss. So stay tuned for a great Q&A, all your questions answered. We discussed the mission of JEPI and JEPQ, which investors they're designed for, what is the strategy or the methodology. So of course, we're going to talk about the options and their option strategy, the portfolio coverage, the out of the money, the moneyness of the options. Of course, we're going to talk about the monthly distributions, how they're taxed, how they determine the monthly distributions, because like we saw, they vary every month. What kind of yields can you expect normally from a JEPI or JEPQ? He answers that as well. And of course, an in-depth explanation of what equity linked notes are and why they decided to include these in the portfolio. So very, very exciting. It was a phenomenal interview. He's a super nice guy. And this guy really is an options expert. And we're going to talk all about these two funds. So stay tuned for that. Very exciting stuff. Hey, don't go yet. I have some important reminders, including some more recent ones, and I'll try to keep it as brief as possible. And for everything that I'm about to discuss, the links and info are in the video description below. So first of all, if you didn't know yet, I do offer a one-on-one coaching session where you'll have a 1-hour Zoom call with me where you could ask me all the questions you want, and I'll help you and assist you best I can. Just remember that I am not a licensed or registered financial advisor or planner. So to book a session, go on my website, passiveincomeinvesting.ca, and right there on the homepage on the left-hand side, there is a small video. Watch that video to know how to book a one-on-one properly with yours truly. Also on my website, you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once. And this is really a reference tool or a companion tool to help you build your own portfolio according to your needs and your objectives. It has lists of funds. It has sample portfolios for both Canadian investors and American investors. So make sure to check it out on my website. I actually created a video which shows the product from A to Z because I don't want you to spend money unless you know exactly what you're getting. So make sure to check that video out on my website. And don't take my word for how good it is. Check out the reviews. There's over 300 of them, and they are all 100% real reviews. So here's some more updated news or recent news. I am now on Blossom, a new investing app designed for investors. I've been using it for a few weeks now. I think it's really, really great. It has a really cool feature where users could actually add and share their portfolios and what they're buying and selling every day. So you could actually link your investing account so it's updated automatically on a daily basis. I recently added my own main portfolio so you could follow how my portfolio is doing live and what I buy every month. Really, really cool. It's like a mix of Facebook and Twitter, but specifically for investing. So get on your phone, click on the link in the video description below and download the app. It's 100% free, so you too could share your portfolio. Just remember to look for me and follow me. My username is Adrian, PII altogether. Also, I do have a referral link for Questrade, so you could get $50 worth of free stock purchases. This is the Canadian discount broker that I use and I recommend. Unlike Wealthsimple, the other popular discount broker in Canada, you could drip everything you want. It has all the stocks and it also has dual currency accounts. Very, very convenient if you're buying both Canadian stocks and American stocks. I have a Questrade video, by the way, which gives you a little tour of the features, so make sure to check that out. I also have a referral link for PASSIV. This is the portfolio tracking tool that I use to consolidate all our accounts to get a nice bird's eye view, so you can consolidate all the information together for easy tracking and stats as well. Also, our Facebook group, Passive Income Investing, is now an invite-only private group. So to join it, you need to click on the link in the video description below and give the group a like to get invited. So we take pride in making this one of the best investing Facebook groups out there with over 13,000 members. There's no scams, there's no spammers, and negative and doomsday people, we kick them out right away. Also, follow us on Instagram if you want a little bit more of our personal journey here in Panama. And lastly, just remember everyone, I am not a licensed or registered financial advisor. This channel is all about my personal investing journey and how I invest to generate high passive income from a diversified portfolio of high yield funds. It's for educational purposes only, so don't forget to do your own research and due diligence. And of course, stay safe everyone, stay healthy, and of course, stay passive. See you next time.